of IT, teaching English, photography, and through that journey, I ended up pursuing a trading career. I just kind of got fed up always sacrificing. I always found that in one of those careers, either your passion or your money or your time was being sacrificed. And, I just didn't feel that was necessary anymore. When you start getting older, you just start looking for more. And trading really sort of met all my needs. And 2007, I met Zaheer Anwari from the Dynamic Trader, and 10 years on, here I am. So it's been an interesting journey, and of course, I get to connect with amazing people like yourself, Chris. So it's been a fulfilling journey up to now.
Excellent. Yeah, that's great. And obviously, we connected a couple of years ago now. I'd been searching for a long time to find a mentor, or just a strategy, I guess. I really believed that trading was something that could offer a really good residual income, something that could fit around a full-time job. I just hadn't quite found the right strategy, the right community. And thankfully, when I met you and you showed me trend trading, and I understood then what trend trading was about, and the community that you exposed me to with Dynamic Trader, well, I haven't looked back since. So now we're at a point where we're sharing this information and helping to educate others about trend trading, because it's not so common. More people, when they think of trading, think about kind of sitting behind a computer all day and getting in and getting out and making quick money. And that's not really the way that we approach trend trading, is it?
No, not at all. It shows how far you've come, Chris.
Yes.
2 years on, you're effectively passing on information. But that's the beauty of the community that we have. It's about growing and moving together. This information is much sought after, and here at the Dynamic Trader, we're very lucky that we have the setup that we do. So it's growing, connecting with a lot of people, and it is what it is. And trend trading, you're totally correct. A lot of people generally go down the route of shorter term trading. There's not much information out there about trend trading, and that's where the Dynamic Trader comes in. We're very uniquely positioned like that. In addition to that, it's the whole business philosophy that we instill in our members. You need to have good software. You need to have a good foundation. Trading here is process driven. It's not results driven. We focus very much on the process, get the knowledge correct, get a good foundation of what you're doing, and then we start pulling trades. More often than not, people start pulling trades first with very little understanding of the markets. And, we're trying to turn that whole approach on its head here.
Yeah, absolutely. Just whilst you were talking, Zaheer, Kite Boy put an interesting comment there, just letting us know that he...
Fantastic.
Obviously been looking for the Holy Grail, as I think we all do with trading, until we, thankfully come across Dynamic Trader. But it's great to have you here tonight, Kite Boy, and we'll answer any questions that you have. So stick with it.
Kite Boy started trading in 2007. That's when I started trading. So I'll be curious to know who the man is behind Kite Boy.
Reveal yourself, Kite Boy.
Reveal yourself, Kite Boy. Definitely, we'll be very happy to have you back in the community. So please do get in touch.
And I wasn't part of Dynamic Trader community back then, but I think that you'll see a very, very different company, and the tools have developed, and the community developed, the communication strategies. There's so much on offer there for people to learn now. So look, I don't want to waste too much time, because we want to keep these blabs really short, really to the point, and we want to cover a lot of different topics through this series. And we're doing these blabs every 2 weeks, and we're choosing a specific topic. And this week we are talking about the importance of having a watch list, or how to create a watch list.
Yeah.
The benefit of this really is just to make life easier, to minimize the amount of time that you need to spend each day and each week looking at charts, because we've all got better things to do, So Zaheer, do you want to start us off in terms of how we approach watch list and what a watch list is, I guess, for anyone who's not really sure.
Yeah. Okay. So I brought my wonderful artwork. With me.
Yeah.
So look, the first thing that I really want to cover is the flow of money. Okay, so can you see that, Chris? Is it clear?
Yes. Yep, we can.
Okay, so the first thing that we want to cover really is to understand the flow of money. When people first come into trading, they generally go down the route of FX trading because it's very well advertised at the moment. So, if you go on the internet and you want to get involved in trading, you put in trading and it's FX. FX is the word on the streets at the moment. And, rightly so. It's a very lucrative market to be in. It's the largest market in the world, $5 trillion, I believe, traded, on a daily basis. It's a huge, huge market. However, it's not always liquid. As we found out throughout most of 2015, liquidity isn't always in foreign exchange. The big dogs, the hedge funds, the market makers, they aren't always in foreign exchange. So the first thing that people need to understand is the natural flow of money. Okay, and money flows from market to market. It doesn't always flow. It doesn't always stay in foreign exchange. So we could see foreign exchange in trend for a long period of time, and then it will go sideways, which is known as a period of consolidation. So when FX goes into consolidation, where has the money gone? Well, it may move to stocks. US stocks is generally the stock market that we focus on, being the second largest market in the world, but then it could have also gone to commodities. So there is a natural flow of money that where market moves where money moves from one market to another. So that is really the first concept that people need to understand. Don't focus on foreign exchange. As a trader, focus on all the markets.
Sure.
Okay. And I believe that was a new concept to you as well, wasn't it, when you first started trading? I believe you're quite heavily involved in foreign exchange and NFP and trading NFP around this time as well.
Yeah, well, the strategy that I was doing before I met you, Zaheer, was trading the news. So I was waiting for big news announcements, such as non-farm payrolls, such as interest rate announcements. And I would put a very tight buy order, 10 pips above the high and 10 pips below. And I would wait for the news to trigger me one way or the other.
Right.
And then I would try and take as many pips as I could within the following 60 seconds. Wow. The problem with that was that sometimes, as we all know, it might trigger you in one way and then price can very quickly turn and go the other way. And you're scrambling to try and get out of a trade that is just plummeting and you're losing money. And it's just risky. It's literally trading like being on a roller coaster. And it's no fun. It's no fun. And I don't believe that there's any long-term profitability in it. I'm sure people will make money that way. I'm sure they will. But it's not a way that I wanted to learn how to trade. It was just risky.
Yeah, there's a lot of pitfalls with that kind of approach. I mean, I guess you weren't using stop losses either.
There weren't much use in that situation, to be honest.
Right, exactly. Yeah. Okay. So it's a real in and out approach, and hope for the best sometimes. We don't have that approach here. It's a much slower approach. It's much more strategic, well thought out. Trading is always done at the end of the day as opposed to during the day. And of course, we should really stress this point that here at the Dynamic Trader, we're technical traders. We don't trade fundamentals. So, everything is based on looking at price action, looking at the charts, and then making an informed decision based on what price action is saying.
That's right. So coming back to the watch list then. So really the reason why we create a watch list is so that we have a good overall view, I guess, of the different market conditions. Right.
Perfect. So going back to what I had said before, once we've identified where the flow of money is, let's say, for example, money is in foreign exchange, what we then need to have is an extensive watch list of the currencies that make up that particular market. Another sort of approach, or the most typical approach really for traders when they first come into trading, is that they have a very limited watch list. They may just trade the euro dollar, for example. They may just trade what they consider their favorite currency, whatever that may be, the dollar yen, the Aussie dollar, US dollar. It could be gold, whatever they have an attachment to, that is what makes up their watch list. Here at the Dynamic Trader, we have, if we're looking at foreign exchange, we have every currency possible on our watch list. So I haven't drawn it all out, but if you look at the first currency, it's the Aussie dollar. So all the currencies paired to the Aussie dollar would be in our watch list. So Aussie dollar, US dollar, Aussie dollar CAD, Aussie dollar Swiss franc, Aussie dollar yen, so on and so forth. We'll have the same with all the Canadian dollar currencies, all the euro currencies, all the pound currencies, all the New Zealand dollar currencies. And on there, we'll also have all the currencies that are paired to the US dollar. So the exotics, for example, like US dollar South African rand, US dollar Singapore dollar, US dollar Hungarian forint, whatever is tradable within foreign exchange, we'd have it on that watch list. So once you've identified the market where the money is, you then need to have every single currency available to you on that watch list. But then this then kind of makes people a little bit nervous, because then what they're thinking is that if the watch list is so big, how am I going to keep an eye out on that watch list every single day?
Sure. Yeah, that's what I would think if I didn't know.
Right. And it's a common question. People always say to me, well, if you've got such a watch list, that must be so time consuming because you're looking at every currency. And, imagine that philosophy with stocks. There's 12,000 stocks. So go back to the flow of money. Imagine we've identified that the money is in stocks.
Yeah.
There's 12,000 odd stocks in the US stock market. We have all of those stocks accessible to us. We have all of them on the watch list, but are we going to sit there looking at 12,000 stocks every single day? No,
absolutely not.
No, of course not. But this is where where you need to look at trading as a business. And this is where good software comes in. So maybe we can talk about stocks another time, but the point is you need good software to trade stocks.
Yeah.
Also,
just briefly, you want to mention the software that obviously we prefer to use for our charts?
Stocks, sure. For stocks, we use MetaStock. So the scanning package that we use for stocks is called MetaStock. Our charting package is eSignal.
Yeah.
Okay.
Yeah.
Okay. So going back to what I was saying earlier, right, now that we've got a big watch list, the next thing that people need to understand is that currencies move in groups. Currencies not all, let's say, for example, we had 50 odd currencies in here. Not all 50 currencies are going to be in trend. Not all 50 currencies are going to be liquid. Within a watch list of this size, let's say 50 currencies, only 4 or 5 of those will be trending. And they move in groups. So what I mean by that is, if I just move on to the next page, let's say the money, or let's say the trends are all on all the currencies that are paired to the Aussie dollar. Right? We've identified that within foreign exchange that the currencies that are trending are all paired to the Aussie dollar. And we can see this with the software that we have. It's very easy to identify because you start noticing breakouts. You start seeing price move in a particular direction, either to the upside or the downside. So it's very easy to identify where the money is once you have good software and a good understanding of price action. As you know, Chris, earlier this year, like start of January, we were very heavily focused on the Canadian currencies.
Yeah. I think it's just worth mentioning, Zaheer, for anyone who's maybe just on here for the first time, when we say that we can identify all maybe the Aussie, pairs, we're talking end of day, we're talking weekly. We're not talking, hour by hour. So we're not having to make rush decisions here. This is something that we're clearly seeing taking place over a period of days or even a period of weeks, isn't it?
Yeah, of course. It's a really, really good point. I mean, when we look at our time frames, we look at the monthly, the weekly, and the daily time frame. So we can see these movements appearing and holding over a long period of time.
Yeah. So it really gives I'll say a hands-off approach, but it means that we can still go about our daily tasks. If we're working full-time, we come home, we don't have to rush. We don't have to be checking our phone throughout the day. It's really, really manageable. And that's the beauty of trend trading.
Yeah, exactly. I think people need to really embrace the bigger picture when it comes to trading, because there's a host of benefits that come with it. As you rightly mentioned, yourself, myself, Javid and Anne, we were all in employment when we first started trading, so we wanted a style of trading that could be adapted around our lifestyles. And, we've all had our hand at day trading in one way, shape or form, but it wasn't suited to our lifestyle. As you mentioned, there are people out there who are making money from day trading, but trend trading just brings some more benefits to it, i.e. it's adaptable, it's less work, it's less stress, and ultimately with compounding, the profits are larger and more consistent. So, looking at the bigger picture is definitely the way forward.
Yeah, sure. And hence we are doing this as a series of Blab conversations, because hopefully whether you're able to join, every conversation or not, what I will quickly do is just post this for anyone who wants to catch up on previous Blabs that we've done. Just put a link there in the chat box. If you just enter your details at that link, it will keep you updated on all of the previous Blabs we've done and all the future Blabs that we will do. And you will actually then have an entire series where we'll look at all the different aspects. So we'll talk about how to identify trends, candlesticks, breakouts. We don't go specifically into what we're trading right now, but we're looking at trend trading overall, as you say, approaching it as a business and looking at all the benefits that trend trading provides. So anyone who wants to sign up on that link there, you'll be kept fully up to date on all of the series that we do.
Yeah, I think it's a really good point. I think a lot of the times people come to these sort of conversations and they expect to see people talking about, well, I'm going to jump into the euro dollar now, and here is my stop, and here's my entry point. Let's see if I can take out 20 pips from this particular trade. I think people are very used to those kind of conversations on the internet. Whereas, here at the Dynamic Trader, you're not gonna see live trades being pulled, because it's not an approach that the Dynamic Traders adopt. We can tell you our philosophy, we can tell you how we take our trades and what makes up certain elements to the way we trade. But how, watching us actually putting trades is not something that you will ever see Dynamic Traders doing.
No, and anyone is more than welcome to contact us, through Twitter, Instagram, email. More than happy to have a good conversation with anybody who wants to talk specifically and find out a little bit more. And also just to mention that if anyone wants to actually see the charts, and you always do a midweek market analysis on Wednesdays as well. So if anyone wants that aspect of it, then just tune into to your midweek market analysis every Wednesday.
Yeah, exactly. It's a really good point, Chris. When it comes to doing live analysis, Wednesday 6 p.m. GMT is when people should tune in. Should we bring the watch?
Let's get back onto the watch list. Yes.
I just want to bring it to a conclusion. So what we mentioned first of all was the natural flow of money, and then we mentioned how once we've identified which market the money is in, then we need to have a complete watch list available to us, because we then want to identify where the money is within that watch list. So, it could be on all the Aussie dollar currencies. It could be on all the euro currencies. It could be on all the pound currencies. Now, let's say, for example, we've identified, as you've rightly said, over days and weeks, we've identified where the money is. So let's say it's on the Aussie dollar currencies. What we have available to us is 1, 2, 3, 4, 5, 6, 7 potential opportunities.
Yep.
Within those 7 opportunities, we narrow it down even further. As you know, we have a 3-second rule in the community. Within 3 seconds, you should be able to look at a chart and know whether it's tradable or not. A good chart should scream at you. If you find yourself staring at a chart, then what you're really getting into the realms of is looking for an opportunity which is not necessarily there.
Yeah. And when we say that, we don't mean the indicators that are spread all over it. We're talking about looking at the price action and being able to tell simply from the price.
Perfect. Spot on. Exactly. Just looking at price action. So within 3 seconds, I could say, for example, no, 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 and no, which will then lead me two opportunities. By the way, guys, this is not just making it very clear here. This is not an endorsement to go and trade these two currencies. This is just an example. Okay, that out of this watch list, I've identified that the Aussie dollar, US dollar, and the Euro Aussie dollar are the two best currencies to be trading within this list. They could all be trending in some way or form, some way, shape, or form. They could all be trending, but these are all, looking at past structure, trends aren't very good, or pullbacks can be very deep, or maybe prices faced with an immediate support or resistance level. These two currencies are what are offering the path of least resistance, where we could potentially see the best trend establish itself over the coming weeks and months.
Yeah.
And they are the only two currencies then we would focus on for the coming weeks and months. So you can see how quickly a watch list of 50 went down to 7, which is now down to 2. And it's those two currencies that we look at every single day for the next weeks and months.
So for someone, that makes a lot of sense, and it's a really good way of explaining it there. For someone maybe who hasn't ever, been used to trend trading, is more used to a shorter term approach, I can imagine now they might be thinking, two stocks, how am I going to make any money? How am I ever going to earn a living just from two stocks? But we're not talking about trading these and trying to take 20 pips or 50 pips from them.
No.
When we do enter these, we're entering for weeks or months, and we're then compounding, which is a different topic for a different day. But well, there we go.
You read my mind. Exactly. It's the magic word.
Yeah,
spot on, Chris. It's the magic word, compounding, and it is a topic for another blab, but that is the magic word. Yeah,
and when we compound a position, we enter a trade, we can compound, 3, 4, 5 times. We could be taking many thousands of pips from that trade.
Yeah,
over the course of a few weeks, might even be a month or 2 months. But that's how we can still make really good profit with just 2 trades. 2 or 3 trades. So just wanted to highlight that for people who are used to trying to take 10 or 20 pips from a trade. We're talking kind of different strategy here, aren't we?
Yeah, exactly. What people really need to refocus on is not how many winners you have, but how large your winning trades are. That's what trading's about. I'm often asked by people, through social media, what's your success rate? If I told someone that I had a success rate of, let's say, 30% as an example, it wouldn't sound too impressive. If I told someone I had a success rate of 90%, that would then intrigue them. But what people don't realize is that 10% could have blown an account because they haven't had any good risk management. It's not about having a lot of winning trades. It isn't. It's about taking a few trades and holding those positions and just repeatedly compounding. And if you look at all the best traders and investors in the world, they've all had the same technique. You look at Warren Buffett, he's compounded. John W. Henry, the turtle traders, Jim Rogers, the list goes on. Compound growth is powerful.
Is something that I just, a phrase that I use all the time is, got to play the long-term game here. Building wealth is a long-term game. And everything we do with Escape the Rat Race is looking at opportunities, ways to create additional income and building long-term wealth. But that's not going to happen overnight. And it's exactly the same with trend trading. We're not looking to make loads and loads of money in a few days or a couple of weeks. We're looking to build an account, grow an account and protect that account. Most importantly, we don't want to lose money. We're always looking to minimize risk and to grow that account over the long term. But we're not talking 30, 40 years. We can grow that account over 5 years. We could go from a small account with maybe £2,000 or £3,000 and that could grow quite significantly over 5 years, couldn't it?
Yeah, exactly. I mean, of course, the more you have, the bigger the compound growth. But you're totally correct. It takes time. It takes time to understand. First of all, you can't eliminate the understanding process. But even then, that doesn't take a long time. When you've got the right software, the right community support, the right teaching methods, you can really understand trading. You can understand the intricacies of trading within 6 months to a year. How you perfect it is really down to the market conditions, because when you first come into trading, the markets could be in consolidation, in which case you may understand the theory, but then being able to put it into practice, you've not been able to do that based on the markets being in consolidation. If you're lucky and you start trading, the markets start trending straight away. If the markets start trending straight away, you kind of ignore one of the most important lessons of trading, which is applying patience. You think, wow, this trading's really easy. I've just entered and everything's going in my favor. And then when market conditions reverse, sometimes those kind of traders who come in very early may end up giving more profit away than they would like, because they think the trends are just going to continue forever. So wherever you start in the market comes with advantages and disadvantages. That's why it really takes a period of trend, a period of consolidation, and another period of trend to really sort of understand it. And that can take 6 months to a year. Yeah,
that's a really, really good point, because it's when you suddenly start making money very quickly that you then think you know all about it, and you start to bend the rules a little bit. And it's when you start to do that things can fall apart often. So
definitely.
So yes, there definitely are benefits to both sides there.
Yeah, it's a journey.
Yeah, cool. So look, I know we started a bit late, but it's 8:05 now. I think is there anything else on the watch list that you wanted to let people know about, Zaheer? Or?
I think that's really it. I mean, what I would say maybe is when it comes to stocks, having 12,000 stocks on your watch list does require a slightly different approach, and that is having meta stock. Because we're very lucky in the community. We have an amazing mentor in the name of Anne Chapman, and every weekend she kindly does the scanning for our members. So what the power of the software is really to narrow down a huge watch list of 12,000 stocks to literally a handful, let's say 40 or 50 stocks, based on a certain criteria that dynamic traders look for. Yeah. That software costs around £2,000 a year, I believe. The watch list, if you went to a website, would cost you a lot of money. Dynamic traders get all of that information as an added benefit. So, you do need to have good software to build a good stocks watch list. It requires a slightly different approach. But once you've got that watch list, as you know, the approach is the same. You may have 50, narrow it down to 10. And then trade the best 2 or 3 within that, according to what meets your criteria.
Yeah, and I guess it's just worth mentioning that we tend to do this work at the weekend. Spend a little bit of extra time at the weekend when obviously we have a couple of hours spare maybe, and that then allows us to be very, very efficient during the week.
Yes,
because we have our watch list.
Yeah,
and all we need to do is just have a quick check through maybe 10, 15 different stocks or Forex, wherever the money is, as you pointed out. And we can identify that. We can do our 3-second rule, and we can go bang, 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 and close the laptop, go to work, or close the laptop and go to bed, whichever your trading style is.
Or feed the ducks.
Yeah. So really the benefits of doing an hour or so on the watch list every weekend means that you can trade throughout the week and spend no more than 15 minutes a day really managing your trading, all of your trading. That's it.
Yeah, I mean, I think you made a really good point. Another good point, Chris, is that prepare at the weekend. Preparation is essential. It's essential. It's that taking that 1 hour of your time out at the weekend to do your in-depth analysis, do your stocks analysis, then means that whatever you do Monday to Friday takes minutes a day. It's a really good point, Chris.
Yeah, and Anne has just made a great point as well, in the fact that because we trade, daily charts, at the weekend, the markets are closed. Yeah. So the Forex market, which is 24 hours, but it does close on a Friday evening and opens again Sunday evening, means that we can do that analysis with no pressure and a really clear mind and a clear focus on our charts.
Yeah.
And just make the right decisions as to what we need to do for the week ahead. So it's a really good time to do that.
Brilliant. Spot on.
Excellent.
Thank you so much.
Cool. Yeah, thank you, Zaheer. That was a really good session again. I'm really enjoying these. And our next Blab will be in 2 weeks' time. And I believe we will be covering, I did have it in front of me. Let me see. I think probably we're going to be covering support and resistance in our next Blab.
Okay, perfect.
Yeah.
Okay, we can do that.
And for anyone that wanted to just sign up, make sure you don't miss out on any of these Blabs. We'll record all of them and send them through to you. Also with the PDFs that Anne Chapman put together called the Almost Complete Guide to Trading.
Yeah.
So you really have all the resources there to educate yourselves in trend trading. And if you want to learn more about trend trading, Zaheer, you have a fantastic Instagram account. I will just pop your Instagram, fx.mentor.
Yeah.
So anyone that wants to follow Zaheer on Instagram, then head to fx.mentor.
I've put the direct URL there.
Well done.
Yeah.
Great.
And also, we have the apprentice training going on. So, the apprentice community is growing nicely. We've had several new members over the last few weeks come into the apprentice community. So, really, we're still, there's still room for a lot more members to come in. So if you want more in-depth training on everything that we've covered today, building a watch list, candlesticks, chart patterns, having access to our some of our tools, some of our software tools, and then, putting that all into practice within a closed community. That's what we have all set up here at the Apprentice. So I'll just put you've done it there. Brilliant. Thanks a lot, Chris.
Pop the link in there. So anyone who wants to find out more.
£99 plus VAT for a month of training. So, it's excellent value.
Yeah. Fantastic way to get started. Yeah. Excellent.
If you don't mind, Chris, just to let people know about the London Investor Show on Friday, which
yes, absolutely. I shall be there supporting you and looking forward to that.
Yeah, I'll be presenting at 1:15 GMT here in London. So any listeners who are here in London or around London in the UK, if you are available on Friday, please come down and come say hello to us. It'd be great to meet people. And of course, I'm periscoping every day as well. Miguel, he's doing some amazing periscopes. Miguel's based in South Africa. He's one of our members, our senior members. He periscopes at 2 p.m. GMT, and I periscope at 4 p.m. GMT. And that's on the Dynamic Trader periscope. So at Dynamic Trader. These are live periscopes for people that aren't too familiar with it. It's very similar to Blab, except that we don't see Chris's pretty face, unfortunately. Just mine. So I'll be there at 4 and Miguel's at 2.
Excellent. And this is all free education, guys. So, just jump on, enjoy it, learn from it, and we hope that it helps. And we're here for any questions that you might have. So thank you, everyone, for joining. Thank you, Kite Boy. Great to see you after so long. Not that I believe yourself and Javid have been catching up there on the chat box.
I've had a personal conversation. Look how long that is.
Really good to see. Thank you, Anne, for all of your comments, and thank you to everyone else. Thank you, Zaheer, and
thank you, Chris.
No problem. We'll see you in 2 weeks' time.
Thanks a lot. Take care, Chris. See you.
Bye.